Okay, welcome. So this is a great interview that I'm really looking forward to having. So I met Bernd sometime last year, actually, when I was speaking at an investor event in Germany. Now I'll get Bernd to give his own introduction, but one of the reasons why I'm excited to have him on is he works for one of my favorite companies. So with that lead in, do you want to give us a quick sort of intro into you and what you do?
Yeah, sure, Callum. First, thanks a lot. I'm excited to be part of this. The Fool. I'm working for The Fool in Germany. We launched the business in 2014. Since then, I'm on board. Different roles. Beginning, I was on the editorial side, generating free site content, trying to get people excited about investing in stocks in Germany. Now I'm we call it Chief Investing Fool. So I'm responsible for our newsletter services that we have, where we recommend stocks. I'm essentially running around all over Germany, Switzerland, and Austria. That's my focus. Trying to find the best companies that our members should invest in, hopefully for the long-term benefit. My background is actually quite diverse. I'm originally an engineer. I studied electrical engineering. Did different stuffs in there, did robotics. Antennas was one of my exciting fields. Close off was photonics, optoelectronics, trying to slow down light, get it stuck in some substrates. It's just what I found was I like focusing on something, but then always when I'm on a certain level, I'm excited to do something new. And that's where my role fits very well, looking at different companies, trying to learn different things.
Very cool. Very cool. Chief Investing Fool is got to be one of the best titles of anyone that we've interviewed so far. That's fantastic. You told me an interesting story about how your role is perceived by, I think you mentioned your family, but generally in Germany, investing's not kind of as I guess commonplace or as understood as some other countries. Can you just touch on that?
Yeah, sure. Indeed, the person that you mean is my father. So he was very proud of me when I was an engineer, and I was quite good at what I was doing. But yeah, mentioned like I didn't get excited about doing the same thing the rest of my life, and switched to that. And now it's the opposite. Like my father is not really. He's a little bit left, I would say. It's not that he doesn't like capitalism or so, but it just doesn't see that I create anything for the benefit of our society, something like that, or doing something productive. And to be honest, I sometimes think the same. I think the financial world has been a bit too big, has grown to too big importance. So when I go to this conference where you have been and I see all these hundreds and thousands, partially really smart people, I think, it could. The society in general could be better off if at least some of them would do something more productive. Not that they're doing unproductive things, but I think as a bunch, it's probably too much. So anyway, but my father's nothing special in Germany, so that's indeed what we found out, and I think what was kind of for Germans obvious. They don't invest into stocks. I don't know the exact numbers in my head, but it's something around, I think in the US, it's about 50% of the people who more or less actively invest into stocks. They have these 401ks or IRAs where they're even encouraged to build their a portfolio for the long term so that they have something to live off when they go into the pension. In Germany, it's not like that. So we can live, or so far, my father can still. I think I will not be able to live off the pension that I will get from the state or my company. That's quite common. So right now, everybody who goes into pension, they have a quite comfortable lifestyle if they had a comfortable lifestyle before. That won't be the case for my generation. But still, people don't see that. And they don't have an incentive or haven't had an incentive to invest into stocks in the past. I think that's one reason. Oh, the numbers. So 50% in the US, and Germany is about 7% of the people who actively invest in stocks. And half of them, they don't even know it. So it's actually not active. They don't even know it because it's some pension fund they own. They don't know that they own stocks. So yeah, they haven't had the incentive. And also the culture in Germany, what we found out in the US, if you go there and people are really excited about investing in a great company, and then if they have a 10 bagger, like the stock price increasing tenfold, that's what we call a 10 bagger, or a 100 bagger, which we've recommended a few. They get really excited and they want more. In Germany, this is not the case. Like they want more in the beginning, but if people have a certain, let's say, amount of wealth, and that's not very high, let's say it's 500,000 or 1 million euros, they kind of get satisfied. They don't want to invest more and grow their portfolio and beat the market. This is just a different attitude that we have in Germany. And that's why I think our business is a bit tougher in Germany. But we still have a few fools that we can get excited about.
Yeah. It's very interesting. I mean, it's I hate kind of the kind of stereotypes about different countries, because whenever you drill into it, those stereotypes tend to fall apart, and you realize there's kind of good people and bad people and things. But definitely, I think that sort of conservative approach is very apparent when I'm in Germany. I love the idea of to most of us, the job you've got is a fantastic job with a fantastic company. I love the idea of your dad being kind of embarrassed by that. But equally, and we'll touch on impact and ESG later, but I have a certain empathy with him. It's a conversation that I've had in the entrepreneurship world, which is, most entrepreneurs, although we're out there trying to create something, you think about how much time and effort goes into like these brain cycles that are focused on how do we improve our marketing, how do we improve our systems, and you think, well, yeah, there's probably bigger problems out there that we could be addressing. And it's interesting, on the plus side, you do see most entrepreneurs, once they reach a certain level of success, do tend to go from how do I solve problems in my business to how do I solve problems in my industry to how do I solve problems in the world. And fortunately, most of the smart stuff that's happening in philanthropy these days is being driven by entrepreneurs that have the freedom to do that. So maybe there's an equivalent there with investing. I think it's ultimately that idea in the book of entrepreneurial investing is kind of, how do you use your money as a resource to solve those problems in much the way entrepreneurs use their time. So I have a certain empathy for your father with some of those things. But,
it's not that I cannot understand him. I understand it, like I mentioned. But I try to. One reason is he's having this opinion. I think it's true for most of the companies out there, unfortunately, that once you're listed on a stock exchange, your focus kind of gets a bit diverted from your business or what trying to create value, or it's rather you try to create value for the stockholders and you forget some of the other stakeholders. And I think that's oftentimes the case. Or managers enriching themselves. So there's a lot of things going on. I think there's a study by McKinsey saying that 83% of the companies, probably in the US focused, but I assume it's worldwide, not too different. They have short-term incentives, like trying to increase their profits in the next quarter or something like this. And this, of course, creates might create wrong incentives.
Yeah, and it's part of why I do think that in terms of kind of fundamental shifts in investing, I think we're hopefully at one of those tipping points in towards ESG. I mean, I think there has been a shift, and I know people have been talking about it for years, but and great to get your opinion on this. But I do feel, when BlackRock comes out and says, we're going to move all of our investments into ESG projects, and when the American Chamber of Commerce, the top 300 companies in the US, said for the first time ever last year or earlier this year that we no longer believe that a company exists for the benefit of its shareholders. We believe a company exists for a number of stakeholders, including the environment, including our teams. And I think that there does seem to be a significant shift. It'd be great to see. Are you seeing some of that as well, or do you think it's more still lip service and not actually real?
Yeah, good question. So I see it a lot from the investor's perspective. When you go to conferences, I was at Berlin Green Investment Summit, I think last year, you can see that more and more people who have the capital and want to invest, they not only say that, they really try to do that. They try to find projects, big projects, or at least try to avoid certain projects. This is definitely increasing. From the company's perspective, I'm not so convinced yet. I might look at the wrong companies, but I think that they have to say something like that to attract the capital, because when the investors say we want to invest in these kind of projects, they try to, of course, sell that to them as well. And they do smaller, I think smaller projects, like they give something to a charity and then they say, look, we're doing something for society. But many companies could do more. What I realized though is there is a lot of companies out there who have that ingrained, or what's the word, in their mindset anyway. So they're trying to do that. What I don't see, I think that the short answer actually is I don't see a shift in the mindset of the people. I just think the people who have done that before, they emphasize it more. The people who have not been doing that before, they try to do some smaller things, but it's not that they suddenly say we have to, or suddenly really try to think about how can we better serve the community where we're in, or the environment, except for...
I think one of the things that sort of gives me a little bit of hope is that actually I don't think, I think for most companies now, you can't attract the best staff. And I think increasingly you won't be able to attract the customers unless you can kind of demonstrate that you're playing a bigger part. And so I think where I was seeing a disconnect, certainly in the small business world, is companies were starting to think a little bit more about community because it helped them to attract the best team. But then you did have this disconnect with investors. And I think hopefully there's kind of a bit of an alignment now. But I mean, I do, yeah, it's still very early days, I think, for most companies.
Yes. So actually, I would agree here that the more companies focus on these kind of cultural aspects, the easier it will be for them going forward to attract capital, employees, customers. In the end, I think it will be driven by us consumers. Whatever we will consume, people will produce.
Yeah. Well, I mean, that's kind of a nice segue into Fool, because Fool.com is a company I came across at the height of the .com boom, when, like many others, I decided I was going to be a day trader, and stupidly, and like just do not have the mindset for day trading, but. One of my key resources was Fool.com, and I learned a huge amount about investing from there. And what really appealed was the ethos and the values that come across from them. So can you just for someone that's not familiar with Fool, could you give us a bit of a background on it and what attracted you to it?
Sure. Actually, exactly same story. I started after coming out day trading. That's how I started being interested in the stock exchanges. And one of the stocks at some point I traded was Tesla. Another one was Ocado or Ocado in the UK, you might know. Both companies, at some point I realized they're kind of great companies. They're doing great stuff. Elon Musk is, back then, I have a different opinion now. Something has changed. But back then, I was starting to listen to conference calls. This guy seemed to be really smart, and he seemed to really having want to make a positive impact on the world, and realized it's so interesting to learn about these companies. And that's kind of, and I came to that also via the Fool. So while day trading, I was reading articles about these companies, and all the time the Fool showed up. And what now I can say, back then it was them. They try to, I mean, we are business-focused investors. That means we write about the companies, but we also want to write in an entertaining way. So we want to entertain the world. We don't want to be too serious. In fact, it's the opposite. How we were born was essentially exactly that. So the typical Wall Street financial guys, they're trying
Right.
not to help their customers building portfolios for them, but the banks, they sell their own products. Whatever is good for them, they will sell and then make people buy it. We said, this is not right. And investing is not as difficult as everybody wants to make you believe. We think you can do it yourself. And that's how Tom and David Gardner, our co-founders, two of our co-founders, started the company by just writing a newsletter to first friends and family. Hey, this is a great company. This is a great stock. Invest into that. Trying to be a bit funny around that. We always make fun of ourselves. If you're not familiar, you should look at some of our April Fool's jokes. We've gained some attention by these things. And we've been growing ever since by trying to find companies which have a similar approach, which look at the culture, which are aware of their own culture. We love founder-run companies, so wherever the founder is still the CEO, because they tend to have a longer-term perspective. Obviously, we look for this long-term perspective in the people who run the business, that they're investing for the next couple of years and not trying to optimize the profit in the next quarter.
Yeah, very cool. Yeah, look, I'm a big fan. Now, in terms of kind of the unique insights, we've got investors watching this from all over the world, and fundamentally, they're kind of looking at how do they get ahead, how do they get some edge for the next year, the next decade. Now, you get visibility of a lot of companies in that in Europe. So you mentioned kind of Switzerland and Germany and Austria and a few places around. Perhaps it'd be useful, I guess. What are some of the trends in investing that you're seeing at the moment, and what are some of the big opportunities that you would be backing right now?
That's a great question. But first of all, I should say at the moment I have actually a tough time finding a lot of great opportunities on the stock exchanges, like to invest, because like the valuations are really high, and in particular, like a couple of years, 3-4 years ago, there was a trend emerging. I think we will get back. We're probably in the hype cycle at the worst possible point, but it's all these software as a service companies out there. So there are companies who offer great products as a service. They have enormous economies of scale. So it's not a specific field that I would look at, but there's a lot of great potential there. Specifically, what I like in Germany is, or what's still coming here, or in Europe, is that this trend of digitalization. It's kind of obvious. Everybody talks about it. Not many people here do it, and there's a couple of companies who help other companies in that respect. So it's either the digitalization of some product, production facilities, Factory 4.0, or what I like, there's a few great companies who help other companies in their services. It's actually, this is something that hasn't been digitalized a lot. Like be it IT services, you want to, as an employee, you need to get replaced your laptop, or you need a new mouse or something like this. These kind of processes are still very analog and very time consuming, resource consuming. And I think there's a lot of opportunity to improve things there. First for the companies who help other companies to do that, but then also for the companies themselves. They can get streamlined. They can actually save on the services costs. And this plays a lot in this ESG as well, because you can make all this for the benefit of your customers. You improve the customer experience, make it much easier to find something. You can become more transparent and all these things. So this is something I like a lot. And I have a few companies on the scorecard and also on the radar.
And obviously, so your focus is only companies that are already listed.
That's right. Yes. Okay, so cool. Here in Germany, yes. We in the US we also have a hedge fund. We have a private equity fund. We have a venture capital fund. So in the US we do more. But me personally, I'm focused on stock listing.
Okay. So I know a lot of investors, especially in the US, but and probably more so in the US, tend to just focus on their home market. Now, it's a big home market, but you're talking about opportunities that you're seeing in a particular market, so Germany. What's your advice for someone that's uh, sitting in the US, for example, thinking should they take the time and the effort to look at a company in Europe?
Yeah, absolutely. I mean, what you're referring to is the home bias, I think it's called. People invest into where they're from. They're familiar with their home country. They know the companies, and it makes sense. What we always say: you should only invest into something that you understand and that you know. And it's more difficult as a US investor to look at the company in Germany, trying to understand the context of the company, the market, etc. The great thing is now we have the internet. You can read a lot. There are studies that you can read. You can read opinions of analysts. You can order newsletters if you're interested in that. Like if you don't have the time or to do the research yourselves. But in general, I think you should really try to diversify your portfolio also away from your home country. I don't know about exact allocations and like should it be 50% home and 50% abroad. That's everybody's own opinion. There's also some currency risks, even though I think this is something they use it as an excuse. They say, oh, I invested into a company in Europe and then I have like exposure to the euro. But the reality is the exposure that you have depends on the company. Like in particular in Europe, we have a lot of export-driven businesses. They typically make, on average, I think 70% of the revenues in DAX. That's our main index. The 30 biggest companies, essentially. I think 70-something% of their revenues comes from abroad. That means even if you invest into such a company, you don't have a high currency risk.
Yeah. Okay. And I mean, you talked about kind of in terms of or looking at companies that are founder run, and often those are in that small cap kind of space, and obviously that tends to be our focus is that sort of the small business world. Now, I mean, you also mentioned Tesla, like it's lots of people are familiar, and there's tons of information out there. Way too much information probably on Tesla and Facebook and the big companies. If somebody's thinking about looking at some micro cap or small cap, what are some tips that you could give them, or some insights as to how they come to a decision? What are some of the risks? What are some of the mistakes that investors typically make when they go into that world?
Well, I think first I would say the biggest mistake most people do is they don't go into that world. They're probably too afraid. They think they won't understand. I think one thing to understand is to these small companies, they don't always bring higher risk with them. And in particular in the region Germany, also Switzerland, Austria, not that much. You have a lot of these smaller companies, that's right. But they're kind of big players in their markets. So they're usually focused on a certain niche and so on. So even though it's just, let's say, 100 million market cap company, it doesn't mean it brings a higher risk than, let's say, a 10 billion market cap company in the US. So I think a mistake would be to just say a small company is a higher risk just because it's a small company. I don't really know. I haven't heard like all the people I get to know who are going into that space. They're looking into two companies into relatively great detail. And I don't see them making other mistakes than they would make when they look somewhere else. Actually, maybe then one of the ones which referring to my first opportunity, just because they're small, it doesn't mean that that they can grow fast. Like you have a company, 100 million market cap. One is called, it's SMT Scharf. They're a supplier of, I forgot, like conveyor belts or transportation solutions for mining companies. I think I don't know the number. I haven't looked at this in detail for our members for other reasons, but they have a quite high market share, say 30 to 50% in that range. And you oftentimes automatically assume it's a small company, it has a big opportunity to grow. That's not necessarily the case.
Interesting. Do you find that generally speaking, those smaller companies don't necessarily know how to communicate well with potential investors. I mean, one of the things I think, we met at one of those investor conferences, and I noticed watching some of the presentations from other companies, oftentimes they kind of just do a product demo rather than specifically trying to address the questions that the investors in the audience have. And yeah, I guess that's that they spend all day, every day talking to clients, and suddenly they're in a different environment. Now, to me, I think from an investor in that small to micro space, that actually presents an opportunity if you're willing to kind of go beyond that. But it does require a bit of digging. Is that kind of your experience as well?
Yeah, absolutely. And I think the main reason is these companies, they just don't have the resources that much bigger companies have to invest a lot into their investor relations or press relations departments. And I have exactly the same experience that these smaller companies, oftentimes they don't publish a certain news until it's like a couple of days go by until they publish something. Or if you have questions, the great thing is, my experience, when you write the questions online or you call them, they oftentimes answer them more directly than bigger companies, where you talk to just somebody smaller. There you have the opportunity to talk to the CEO or the investor relations guy. He is just so close to the CEO that he can essentially answer the same questions the same way. And so the opportunities, I see it exactly like you. The opportunities that most people don't want to go that way. They don't want to think a bit more deeper, try to come up with some critical questions. That's different in the professional space. I'm talking about retail investors now. Like, you invest your portfolio, and it's understandable because you need to think a bit more and you spend the time, which some people don't have. But if you're this type of person and you like to do it, definitely would encourage everybody to just go ahead, look at these smaller companies, and don't get discouraged by their bad communication. That's exactly the opportunity.
Yeah, and look,
one of the opportunities.
I think it's a really, really good point. And look, I mean, people might be saying, well, look, if you phone up the CEO from Full.com, of course they're going to take your call. But I also I do think one of the advantages that you have with a small cap or a micro cap is your ability. Most of the time you can probably get through to someone quite senior and have a reasonable conversation with them, and that's quite unique. I don't imagine it's too easy to get through to Zuckerberg if you've got a question about the direction. So yeah, I think it's a great opportunity, and I also think it's a good just in terms of your personal development and learning to be able to sort of have those questions, and obviously be prepared. Don't waste anyone's time, but it's an exciting opportunity, I think. Look, so Ben, you've given us tons of information, and I'm conscious of your time, and it's been a great discussion, and I think some really good bits and pieces there for people to pick up. Is there any kind of last thoughts or hot topics that you think investors should be looking at right now?
I would say, I think this coronavirus is in everybody's mind. People start, it was already last year, talking about like where are the markets going, etc. So this is a typical full message. Don't get too much into this thinking about what is happening in the next year or so. Look at the longer term. You will find the opportunities. Try to find management who think for the next 10 years, who invest at the right point. If you do something like that, it doesn't matter if you miss the next Tesla or the next whatever comes, the next Amazon. You don't have to find all of these. I personally don't look at the next trend that is coming. I like when a trend is coming, is seen there, but it's not necessarily that you have to find this. Think about that. You can find opportunities all the time and everywhere. You have to do a little bit of digging.
Yeah, part of the fun.
For me, yes. Agreed.
Yeah. Cool. Look, thank you very much indeed. For anyone watching, if you haven't already, do go and check out fool.com and have a look at the German version. You'll see some of Bernd's writing, and yeah, encourage you to check that out. So thanks again for your time, and I'm sure we will be connecting further at some more of these investor conferences.
Yeah, would be great to see you again. It was a pleasure. Good luck.